While the world was celebrating silver's historic breakout, a different kind of meeting was taking place in the shadows of the financial system. It wasn't a board meeting. It wasn't a regulatory session. It was an emergency war council. At 3 a.m., under the cover of darkness, exchanged officials and the heads of major bullion banks gathered in secret. Their mathematical models had delivered a terrifying verdict. The free market was about to bankrupt them. Silver had shattered the $75 barrier, and the trajectory pointed straight toward $100. They faced two choice: accept catastrophic losses and watch their empires crumble, or rewrite the rules of the game to steal your wealth. They chose theft. A notice appeared on the exchange website at dawn. No press release. No announcement. No tweets. Just a silent decree that would alter the fate of thousands of traders in an instant. Margin requirements were being raised to unprecedented levels. This wasn't a routine adjustment. This was a weaponized financial strike designed to force retail investors to liquidate their winning positions. They couldn't defeat you in fair competition, so they bribed the referee to change the score mid-game. But what does raising the margin actually mean? How does this seemingly technical maneuver translate into the robbery of your hard-earned gains? When you trade futures contracts on the COMEX, you're operating with leverage. You deposit a fraction of the total contract value, say $10,000, to control a much larger position in silver. This system functions smoothly until the banks begin hemorrhaging money. The rule change enacted in those pre-dawn hours effectively doubled the cash required to hold a position. Imagine purchasing a home, signing the mortgage, and receiving a call the next morning. We've changed our minds. You need to deliver another $50,000 in cash by noon today, or we'll seize your house and sell it at auction. That is precisely what thousands of traders are experiencing right now. They're being hit with margin calls, not because the price of silver collapsed, but because the rules were altered while they slept. The exchange is manufacturing a forced liquidation event to create artificial selling pressure, all to rescue JP Morgan from insolvency. But the margin hike was only the opening salvo. Reports are flooding in from multiple brokerage platforms. Buy buttons are disappearing. Traders attempting to purchase new silver contracts are encountering error messages. Risk management, limit reached. Trading restricted to liquidation only. This is the GameStop playbook, refined and weaponized. You're permitted to sell your silver to the banks, but you're forbidden from buying more. When the ability to buy is removed while the ability to sell remains, the price can only move in one direction, downward. This isn't a free market experiencing natural price discovery. This is a controlled demolition orchestrated by those who are supposed to be neutral referees. They're artificially strangling demand to allow the banks to cover their naked short positions at a discount. It's market manipulation in its purest, most brazen form. While they restricted your ability to participate, the banks unleashed their own algorithmic weapons to paint a false portrait of the market. This morning, massive sell walls materialized on the order book. Blocks of 5 million ounces appeared for sale at $76. Creating the illusion of overwhelming supply. But here's the catch. These orders were never real. This technique is called spoofing. The banks place enormous sell orders to terrorize the market, watching as traders panic and prices tumble. Then, milliseconds before execution, they cancel the order. They never intended to sell a single ounce. They simply wanted to manufacture the illusion of massive supply flooding the market. They're gaslighting the chart, creating a mirage designed to convince you that everyone is selling when the truth is the exact opposite. Everyone wants to buy. It's psychological warfare, a calculated operation to shake weak hands out of the market before the final ascent begins. We must confront an uncomfortable truth about the COMEX itself. The exchange is supposed to function as a neutral arbiter, ensuring fair play and transparent price discovery. But the COMEX is owned by the very banks it's meant to regulate. Board members are former executives of JP Morgan and Goldman Sachs. When they declare rule changes, they're not protecting market integrity, they're protecting their friends from financial annihilation. By raising margins and restricting positions, the exchange has violated its fiduciary duty to the public. They've proven beyond doubt that the paper market isn't a venue for honest price discovery. It's a rigged casino where the house throws you out the moment you start winning. The legitimacy of the COMEX died this morning. They sacrificed their reputation on the altar of cartel solvency. In 1980, The Hunt brothers cornered the silver market, driving the price to $50 per ounce. The banks faced total collapse, so the exchange changed the rules. They declared Silver Rule 7, which stated that traders could only sell, never buy. The price plummeted from $50 to $10 in mere weeks. The banks are deploying the exact same playbook today. They believe it will work again, but there's a critical difference this time. In 1980, the demand was purely speculative, wealthy gamblers chasing quick profits. Today, the demand is industrial. You cannot tell Apple or Tesla liquidation only. They need physical metal to manufacture products. The rule changes might frighten speculators into retreat, but they cannot halt industrial consumption. The banks are fighting a war against physics itself, and physics always wins. The most damning evidence of their manipulation is the widening chasm between the paper price and the physical price. While the banks manipulate the digital numbers flashing across your screen, the real world tells a starkly different story. If you attempt to purchase a physical 100-ounce bar today, dealers are charging premiums of 40% to 50% over the spot price. Why? Because the spot price is a fiction. The paper price is a lie agreed upon by thieves in expensive suits. The real price is what you must pay to hold actual metal. In your revolt, this disconnect proves the COMEX has become irrelevant. The banks can smash the paper price to zero if they wish, but they cannot conjure silver into existence in your safe. The market is bifurcated into two realities: the banker's price and the people's price. Traders must prepare for the next escalation in this war. Buried deep within the exchange's user agreements is a clause called force majeure. This provision allows the exchange to void contracts during an emergency. If silver continues its ascent, despite their cheating, they will likely invoke force majeure. They'll declare, "We cannot deliver the silver because there is none remaining in the vaults. Here is a cash settlement based on yesterday's rigged price." This is legalized theft. It transforms your property rights into worthless paper claims. They're constructing the legal framework to default on their obligations. They know the vaults are empty, and they are writing the rules to absolve themselves of liability when the run on the bank begins. Where's the outrage? Where are the investigations? Turn on financial news, and you'll hear nothing but silence. CNBC, Bloomberg, and the Wall Street Journal are ignoring the biggest story in modern finance. They're not reporting the margin hikes. They're not investigating the shortages. Instead, they're publishing coordinated hit pieces, dismissing silver as a meme stock and a dangerous bubble. This media blackout is purchased with advertising dollars. The banks are the largest advertisers on these networks. They control the narrative to keep the public blind. They want you to believe the price drop is natural, not engineered. They're suppressing the truth as aggressively as they're suppressing the price. Why are they risking prison sentences and public revolution? Because JP Morgan is trapped. They hold the largest short position in the history of commodities markets. If silver reaches $100, the losses on their books will exceed their Tier 1 capital requirements. In simple terms, they go bankrupt. The entire institution could collapse. This is why regulators are permitting them to cheat openly. The Federal Reserve understands that if JP Morgan falls, the entire U.S. banking system follows. They've deemed JP Morgan too big to fail and granted them a license to rig markets for survival. We're not fighting a single bank. We're fighting the combined power of the state and the financial elite. But there's one player who refuses to follow Wall Street's script: China. The Shanghai Gold Exchange operates outside COMEX jurisdiction. China observes this cheating and interprets it as weakness. When the West suppresses prices, China accelerates its accumulation. They're exploiting the artificially low prices to drain the West of its remaining strategic reserves. The Chinese government actively encourages its citizens to purchase gold and silver. They're hoarding physical metal while the West plays with paper derivatives. By cheating, American banks are inadvertently transferring the keys to the future global economy to the East heir. They're selling their birthright for quarterly bonuses. The rule changes are also infuriating industrial giants. Companies like Samsung, Tesla, and Sony depend on futures markets to hedge their input costs. When the exchange rigs the game, it destroys their ability to plan production. Rumors are circulating that major industrial buyers are abandoning the COMEX entirely, establishing direct supply contracts with miners instead. This is the death knell for the exchange. If industrial users depart, the COMEX becomes nothing more than a gambling parlor for paper speculators. The physical market is migrating away from New York, leaving the bankers to trade phantom contracts among themselves in an irrelevant echo chamber. The banks made a fatal miscalculation. They assumed that by crashing the price and changing the rules, they would terrify retail investors into capitulation. They thought you would panic and sell. Instead, they've ignited fury. Forums and social media channels are exploding with rage. Investors aren't selling, they're doubling down. They're withdrawing money from the system and buying physical metals specifically to punish the banks. This is no longer merely a trade. It's become a movement. A financial revolution. Every act of cheating validates our theses. They're radicalizing an entire generation of investors who will never trust fiat currency again. The banks want you to believe they're omnipotent. They want you to think they control price at will. But their actions today, the frantic rule changes, the emergency margin hikes, the desperate spoofing, these aren't the moves of a powerful entity. These are the flailings of a cornered animal. A strong adversary doesn't need to cheat to win. The fact that they're cheating so brazenly is the ultimate confession of weakness. It means they've lost control of market fundamentals. They're attempting to hold back an oceanic tide with a broom. They can delay the inevitable, but they cannot prevent it. The dam is fracturing, and they're running out of fingers to plug the holes. What we're witnessing is the death of the idea of a free market. If rules can be rewritten whenever billionaires face losses, then there is no market, only a rigged game. This creates moral hazard on a catastrophic scale. It signals to banks that they can take massive, reckless risks, knowing that if they lose, the rules will be changed to rescue them. But this destroys faith in the system, and faith is the only substance backing the US dollar. By rigging the silver market, they're undermining the credibility of the entire American economy. They're burning down the village to save the castle. Despite the paper manipulations, the physical supply crisis worsens by the hour. Mines are depleting, ore grades are falling. No major new deposits have been discovered in over a decade. We're consuming silver faster than we can extract it from the earth. Above-ground stockpiles have vanished. We're now eating into strategic government reserves. The banks can print paper contracts until their servers overheat, but they cannot print geology. The fundamental deficit is mathematically certain. Eventually, manufacturing demand will overwhelm paper manipulation. When a factory must halt production for lack of silver, the price will go vertical regardless of what COMEX rules dictate. Much of the short selling occurs in the shadow banking system, the over-the-counter OTC market. These trades aren't reported publicly. This is where the real leverage hides. We estimate the true short position is 5 to 10 times larger than official figures. This hidden debt is a ticking time bomb. As interest rates rise and silver climbs, the cost of carrying these dark positions becomes unbearable. We're approaching a Minsky moment for the bullion banks. A sudden, violent collapse of asset values triggered by excessive hidden leverage. Despite their cheating, the wealth transfer persists. Every ounce of physical silver you purchase removes collateral from their system. They're trying to shake you out because they desperately need your silver to cover their shorts. Do not surrender it. The volatility is the price of admission. The cheating is proof of impending victory. We're in the final rounds of a championship fight. The opponent is dirty, hitting below the belt, but he's exhausted and wobbling. One more surge of buying, and he falls. It ends with the failure of the exchange. It ends with the physical price completely decoupling from the paper price. We'll witness a black market where real silver trades at double or triple the official price. Eventually, the official price will be forced to chase reality. The gap will close violently and suddenly. The banks will receive their bailout from the Federal Reserve. The currency will be debased to finance it, and the holders of physical metal will be the only ones standing with preserved purchasing power. The cheating isn't evidence that the squeeze has ended. It's proof the squeeze is entering its terminal phase. They changed the rules because they're losing. They halted trading because they're terrified. They want you to sell. They want you to surrender. But you know the truth. You've seen the empty vaults. You've done the math. The system is broken. Silver is the truth. Do not let them steal your future with a rule change. Hold the line demand delivery. Empty the vaults. The era of manipulation is ending. The era of the people is beginning.